Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 5th, 2025, and we're diving into ChargePoint's first quarter fiscal year 2026 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ChargePoint, a leader in EV charging solutions, has just released their Q1 2026 results, and there's a lot to unpack, from revenue figures to strategic partnerships.
Revenue and profitability overview. Let's start with the revenue and profitability. ChargePoint reported a revenue of $97.6 million for Q1 2026, which is a 9% decrease from the previous year. However, their gross margins have improved. John, can you elaborate on this?
Absolutely. While the revenue saw a decline, the GAAP gross margin increased to 29% from 22% last year, and the non-GAAP gross margin rose to 31% from 24%. This improvement is largely due to a 14% year-over-year growth in subscription revenue, which now makes up a larger portion of their total revenue, enhancing overall margins.
Operational efficiencies and future outlook. ChargePoint has also reported a reduction in operating expenses. How significant is this in terms of their financial health and future outlook?
The reduction in operating expenses is quite significant. GAAP operating expenses decreased by 10% to $81.8 million, and non-GAAP operating expenses fell by 15% to $56.7 million. This indicates effective cost management. Despite a net loss of $57.1 million, their cash position remains strong at $196.3 million, with no debt maturities until 2028, which provides a solid foundation for future growth.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 9 cents, but ChargePoint reported an EPS of 12 cents. What does this mean for the company?
This EPS miss of 0.03 cents indicates that ChargePoint's financial performance was slightly below expectations. While this might raise concerns, it's important to consider the broader context of their strategic initiatives and cost management efforts, which could offset the short-term impact of this miss.
Key takeaways. In summary, ChargePoint's Q1 2026 results show a mixed performance, with a revenue decline, but improved margins and strategic partnerships. John, any final thoughts on ChargePoint's investment prospects?
ChargePoint's focus on innovation and strategic partnerships, like the one with Eaton, positions them well for future growth despite the current challenges. Investors should keep an eye on their ability to execute these initiatives effectively.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ChargePoint's performance in the comments below.